Hello, everybody, and welcome to today's webinar here at Intuition, where we're going to be focusing on the risk culture in the age of AI skills and how you make that effective in the workplace and how we go about our training to make sure that we apply those effective traits that we do. I'm joined today by Deanna Purdy, Director of Credit Product Strategy and Operations within Institutional Credit Management over at Citibank, as well as our Chief Learning Officer here at Intuition, Patrick Pancoast. The three of us have worked together extensively over the years of a great partnership and going to share a lot of those insights today. But with limited time, I figured let's just jump right in. So I'm going to start with you, Deanna. First question up is, what has the arc of your career travel been so far? How did you get started? How did you find that interest? What was the passion that really drove you to where you are today?
So we're just coming in with, I think, a little bit of a story. So I think that my career, I'll stick with Citi. I had a couple of jobs prior to joining Citi, but I've been here for the vast majority of my career and started out actually in operations and technology. And I tell this story sometimes, which hopefully it's not taken the wrong way, but I tell the story during interviews that my first day here, I really didn't think I would last more than a couple of weeks. I was very sure that this was not the place for me. I was in operations and technology at the height of the crisis and was responsible for a lot of remediation of account data, and it was very copy paste. Luckily, I stuck it out. So I think after migrating into the risk organization in 2012. I started out as a credit analyst, moved into credit officer role, team lead role. I specifically covered financial institutions, managed a small portfolio of broker-dealer accounts as a credit officer. And then that's kind of where my relationship, I would say, with intuition. I think we'll talk about this a lot throughout the session today, but that's when I started taking some of these risk classes, and I really liked what a little bit more involved in the training side of things. So while still being in risk management within the institutional clients group, that's what it was called at the time, started partnering with our learning organization and with vendors to do some scheduling of training, learned about the entire wonderful career opportunities within the Citi Learning organization, and actually transitioned into a learning advisor in 2019, I think it was. And that kind of propelled, I would say, a lot of wonderful opportunities. I feel very blessed with all of the opportunity that I've had at Citi, but that's really when I started getting more hands-on with training. I was responsible for the wholesale credit risk curriculum build out and the transformation of that, which I think, again, we're going to talk to in a little bit more detail later, but that's where I think my brain started turning of how are we training people on these concepts and making sure that those skills stick. I was in learning and development for a couple of years and then moved into institutional credit management in 2022. And within the credit product strategy and operations team that I am part of, I manage the talent and communications, the in-business talent and communication space, which is mainly going to be all of the in-business technical training, a lot of our systems training, things tied to corrective action plans or regulatory requirements, some things that are tied to policy that kind of sits within my realm, as well as the in-business communications, engagement, and culture work streams.
It's fantastic. And how have all those experiences and everything you've done from the ground up really influenced your skills development, but really understanding the risk culture at Citi and really better understanding of the learning needs and the way these programs have to be developed to really have that impact?
Yeah, I think it really was when, I think it helped that I had taken a lot of the classes. So if I think about the wholesale credit risk curriculum and specifically, we offer a lot more risk classes than just the wholesale credit risk, but I'll use that as the example. I think having taken a lot of those classes myself, having applied them in an analyst type role, in a credit officer type role, it became pretty clear that the interactive learning model, whether it's in person or virtual, was absolutely necessary. So, the classes offered largely are case study based, and that's something where you can't really learn the full concepts without having the ability to practice those skills. And I think using real world examples helps to kind of tie it all in. Um, but I think in general, like the risk culture and how we are framing risk through all of our training programs, that's a huge initiative at Citi right now. The slogan is "We are all risk managers." This is something that across first, second, third lines of defense, it's becoming um, front and center for a lot of our business lines and functions where we all have a role to play when it comes to risk management. So I think for a long time, historically, the view was if you are in risk, you manage risk. If you're in the business, you originate, new business lines and you're selling. And that's not the case. I think frontline, first line of defense businesses have a much bigger role to play, and we've learned that through multiple scenarios over the last decade or so. But that's really that concept of we are all risk managers is coming through in not only the trainings that we support, but also in just the day-to-day responsibilities of our staff.
Yeah, that's fantastic. And for those who might not be aware, for your specific division, can you kind of elaborate and explain the core ICM functions over at Citi?
Yeah, so the genesis of so ICM's been around for a couple of years now. We were sort of born out of the consent orders, and I think that if I dial the clock back, credit functions used to be embedded within a lot of different business lines. So you would have underwriting, if I use that as an example, underwriting responsibilities were being done by bankers, they were being done by risk managers. So ICM it was stood up to be a first line of defense function that's responsible for managing the end-to-end credit approval process within Citi's wholesale credit portfolio. So um, it's really intended to be the one-stop shop for, when you think about credit analysis and underwriting of those credit memos, and then banking, strictly tying to sales and origination, risk management, fully aligns now to, that check and challenge, credible challenge and approval function. But then within ICM, so we have some core services and capabilities. Obviously, the credit underwriting space is paramount. We split the team out by different industries. We've got our leveraged finance, corporate developed markets, the public sector space, real estate and structured credit. There's a number of different portfolio alignment under the credit underwriting space. We do portfolio management, so that's going to be a lot of our stress testing, collateral management, early warning, covenant monitoring, things like that. We have credit risk management services that is processing all of our loans and our credit lines. So really considered to be kind of that back end operational function that makes sure everything that's approved is actually what's reflected in the system, and that our clients can draw on those lines that we've approved during the credit approval process. And then the supporting unit. So those kind of are what drive the core services and capabilities. But then the supporting units is going to be our in-business quality assurance team, which is really, I guess you could equate it to an internal audit type function. It's very different than that, but I think they're doing a lot of our quality control checks, making sure that our processes are functioning in the way that they are designed to function. We have product development and transformation, a huge part of ICM's transformation through, I guess, the last, I would say about 2 years, is the development of a brand new credit platform called Helios. And the product development team has been hard at work, making sure that platform is being stood up to be a full end-to-end credit platform. All the lines of business will start using that over the next few months. Most already are, but there's still some portfolios left. And then last but certainly not least is my team, which is credit product strategy and operations. So we're responsible for really the strategic direction. We're involved in a lot of the remediation efforts, strategic initiatives, the training, communication, capacity planning, where we really do drive as the name states, the strategy and the operations, but providing support to all of the different ICM pillars when it comes to risk and control, or how we're developing talent within the organization.
It's fantastic. Fantastic. And switching gears to our friend Patrick over here, as we kind of look at the longstanding Citi Intuition partnership, how we've really developed all these courses and really built a very strong, robust curriculum that is basically learning by doing and being a learning program where it feels like you're doing your job. But Patrick, before we jump into that, just some background on yourself. How did your career evolve so that you could be able to teach all these counterparty credit risk courses and even more?
I started out as a corporate banker, and I worked, ironically, it's been in the news. I worked in the former 270 Park Avenue building that was torn down and replaced by the new JP Morgan. The time when I started, there was no credit department in any bank, none. Everybody who was a banker had to do all the credit work and take responsibility for the loans. I became very fascinated by derivative products as that came into the market and became more and more important. And so I shifted over from making loans to working in derivatives with clients. And then I decided that I would go back to where I started, which was teaching. In my case, it was teaching French, but I was hired by a firm to teach corporate bankers about derivative products and capital markets, and I've been doing that a long time. I I got involved with counterparty credit risk for the first time for me at Citi. This was more than 20 years ago, and I always thought very fortunate to be able to fly all over the world and teach people about counterparty credit risk. And that evolved with Deanna's arrival in 2019 into teaching many other aspects of credit as well. And we teach now about 10 different classes on various aspects of credit and risk analysis and remedial management, etc.
That was great, Patrick. And perfect segue into our next question for Deanna here, just to talk more about what she teased in her intro of the longstanding partnership between Citi and Intuition, myself, Robert Fox, Patrick, everybody here. And how did that start? How did it evolve? And how we got to where we are now with these, as I keep mentioning, effective, like strategically built learning curriculums?
Yeah, I think that I think if I go back to 2019, obviously no one knew the challenges that we'd be faced with COVID. And I think that when we started to build out the wholesale credit curriculum, the scope was maybe the size of a strawberry, and COVID, I think, completely pivoted the direction that we had to go, but also gave us a lot of opportunity to rethink all of the different criteria. So, and also I think consent order, I guess, reflections back on kind of how we needed to improve the wholesale credit risk enterprise at Citi. I mean, this was one of the key areas that we've as a firm been looking at over the last five or 6 years now. Um, all of this kind of provided a really unique environment to kind of get it right. So, um, yeah, so I mean, I think that my experience with intuition again started before I was in learning, because I was a participant in a lot of these classes, but intuition, I think what really strikes me and why it's been such a long-standing, very strong relationship for Citi is that no situation did we ever feel that intuition would not roll up its sleeves, come to the table and solution. Virtual learning wasn't, it's so funny to think about it. Virtual learning was not a thing like 6 years ago, 5 years ago. It really, I remember these headsets and we would have conference calls on phones and that was my interaction with Patrick. WebEx, I think we started with, maybe Adobe Connect. Zoom wasn't even largely, Citi was not, we didn't have a Zoom account at the time of us virtualizing this curriculum. But
Yeah.
what we learned pretty quickly is that training can't take a 2-year pause. That's not something that is an option, and we couldn't travel. And so I think that that's just where, I guess, the partnership that we had with Intuition was, hey, we need to redesign this entire curriculum and make it virtual. Can you do that for us? And the answer was very quickly, yes, let's figure out how we're going to do it. And it was not easy. And I think that that's probably why it's such a strong relationship, because relationships are forged in the fire, and it was a lot of work. I think there was a really, um, that was a challenging time, I think, for me as a learning advisor. And I was pretty new to learning. I mean, I had only been a learning advisor for about a year when we were expected to do things that had never been done before. But I think Intuition was, A, willing, and B, prepared for um, the creativity that is required to do that. So it was a very fun experience. And what I love is that we can travel now and we can do in-person learning now. And for the most part, we've reserved our learning for virtual because of all the benefits that we've seen through it. Um, yes, it costs less to send. We don't have to send people to all of these different locations just so they can get the baseline information of whatever that course is teaching, but also the collaboration that has been um, possible across regions. I mean, the classes are obviously virtual instructor led. So these are, you're still interfacing with your instructor. The videos are always, strongly encouraged to be on, but you have regional outreach at this point instead of site specific. So in the past, it might be a class that was run in Buffalo. That's where I'm located. You're seeing a lot of colleagues from your Buffalo office. You might have gotten one or two people to fly into Buffalo to take a class, but it's probably the people that you already interact with on a pretty regular basis, versus in the virtual forum where, when you're doing small group breakouts, I'm now interfacing with somebody from Mexico or Prague or bless their hearts, these participants from APAC that join the NAM sessions because it works better for you're getting um, that global feel to things that wasn't available in the in person.
And that global networking that everyone tries to
Yeah,
create in different ways, that just became naturally.
it's
And
just
I couldn't agree with you
organically,
more.
and
Yeah.
yeah, exactly.
You said it best. There's nothing fun about COVID and the pandemic, but I do remember the days when we had to put this all together, the three of us and more put our heads together. It is fun to look back on and like what we've been able to develop and building the programs in a way virtually that could also be taught during the flow of work. And
Yeah.
that was the genius of Patrick and how he structured them to make sure that people still have time to do their jobs throughout the day as they're attending the learning and kind of revolutionize that whole approach. And I think it goes without saying, but like when this all rolled out, when the bank opted to make CCR courses prerequisite for promotion to senior risk officers, was that a good moment for you? Is that something that was like, we did it, we won, this is how we've gotten here? But just want to get your feelings on when that kind of announcement came out. What was the reaction?
Yeah, I think there's still a lot of work to do in the CCR space, but I think, so I won't call it a win and like we're done, but it's behind us. I would say it's super critical. And Patrick can probably attest to this as well, but when we send people, we have a very intense credit evaluation program where we mint our SCOs. And for the most part, I think at this point that even that program has been redesigned so that people who are traditionally aligned to corporate credit are required to be assessed on certain aspects of counterparty credit risk knowledge and vice versa. People who with counterparty credit risk alignment on their day-to-day portfolio, they're required to go through some loan restructuring, things that aren't as common. And I think we have to make sure that our senior credit officers are well-rounded. Um, it's still a very critical focus for Citi, I would say, specifically the derivatives and securities financing transactions portfolio, making sure that our corporate credit underwriters and bankers and risk managers understand derivatives in a way that it is applicable to every portfolio. Um, and we have to understand the inherent risks involved in these transactions, which are really, I would say, impacted by such a different catalyst. Like where it's
Right.
a very different thought process. So yes, it was very definitely it was a good day
Yeah,
when that happened. And I think we just have to continue to think through how do we make this even more applicable to the non-CCR specific portfolios, and figure out ways to work that in.
absolutely. And Patrick, for those who might not be familiar on the line and will be watching this, could you briefly explain how counterparty credit risk differs from lending credit risk and the particularly challenging ideas that come along with that?
The primary difference is that the credit risk, when a bank makes a loan, the bank is taking the credit risk of the party to whom the loan was given. When you trade a derivative with a counterparty, the credit risk is bilateral because the market value of a derivative position can move in favor of the bank. Also, it can move in favor of the client. And the amount of exposure that banks are taking is unknowable because it's based on what happens to market prices and rates in the future. So, as we do with all unknowable future quantities, we try and model that. And the practice of modeling the future exposure employs basic statistics. And I know from teaching, I don't know, dozens of thousands of people, everybody took statistics, almost. And if you ask people, was that your favorite class? Almost every single person will say, no, I didn't like it at all. And here we are now with counterparty credit risk. And in order to understand what the exposure that you're taking is, you need to have a modicum of understanding of how we model movements in market rates and prices. So that extends out also into very imaginative and creative business people. And what originally attracted me to derivative products years ago was that it was like discovering poetry, where writing up credit analysis was more like prose. And derivatives allow people to be very imaginative and very creative. And a bank like Citi, just like all the other major banks, is doing incredibly ornate deals with clients, solving clients' hedging problems and market risk management strategies. And so we like to bring in actual clients, actual deals into class because that way people can understand it better. And
Absolutely.
I think, Deanna, that was the part that you and I agreed on, right, automatically, that using the case
Yeah.
studies was the right way to build up people's learning curves.
Yeah. 100%.
Yeah. What we love to see in comments we get all the time on the courses are, this course is just like what I do at work. And, I love Deanna and Patrick, with the time that we have to kind of talk about how we went about building those case studies, how we built that approach, why we get those comments. And, it's no easy feat to take something that seems like learning, but actually have it feel like what you do your day to day to really come back and apply it right away. So just how important are those case studies, especially in the advanced courses, and any thoughts or insights to share on those?
Sure.
Yeah, I can. Oh, go ahead.
Go
You
ahead,
kick off.
Deanna. Go ahead.
I was just going to say, and I'll keep it pretty short. So I think about, if I tie it into learning, the three E's, right? Experience, exposure, education. I think the culture right now is that to learn something, you need to be trained on it. And I struggle. I love training. We all know learning is a passion of mine, and that isn't where it ends though. And so I think with the case studies, we're able to pull in the experience and exposure into what I'll call like the safe place for making mistakes, because I think that that's where a lot of times, um, and I'm sure it's not unique to Citi, but we're not giving people opportunities all the time to fail, because it's if you're learning only through experience, those are real world examples, and there's a real risk associated to that. In the classroom setting, you can take that exact same situation and you can pull it in to a case study, and you can let people work through that 3, 4, 5 times until they get the right answer, and then they're much better suited to make the right answer when they're back on their desk. So um obviously, we had to go through a lot more red tape, I feel like, on making sure we're keeping things anonymous. We're not using confidential information. So all of that is always clean when it comes through in the case studies, but the examples are there. And even to the point of being able to go online, search for the 10Ks or the annual reports, and kind of walk through the process that they're actually going to be doing on their desks. That's all part of some of these courses. So it's been really fun to watch.
Yeah, the as Rob mentioned, my favorite comment that people often say at the end of a course is, "This course was just like work." And that's not an accident. That's because we've worked really hard. In this case, with Citi, with Deanna, we had meetings with countless front office people and risk people to agree on what would be the best case study for this or that aspect of whichever course. And I have an opinion always about what's going to make a good case study, but when you talk to the people who did the business with that client, they have an opinion as well. And I think that interaction allowed us to create and continue to create the kind of very real, very practical case studies. And Deanna's right. People need time, and learning takes place not by listening, I think, but by thinking and talking to other people. And the power of those case studies is that people are working on them in small groups of 4 or 5 people, and they're really into it. And they're professionals. They are, using all the professional skills they have, but they're meeting people from other countries, other parts of the world of Citi, and they are having to collaborate to figure this out. And some of them are not easy to figure out. And of course, there's a huge variety in terms of the people taking the courses. And now and then we have people who are more familiar with the risks and the business, and they are a very nice addition to the small team case study groups.
Absolutely. And as Deanna and Patrick, as you both know, with all these programs, the facilitators we choose to work with are people who worked in the front office and risk management at all these large institutions on that global scale. So they bring a lot of their pearls of wisdom, their war stories, and their experiences to the table to really make it even more effective, and that kind of desk ready approach that we like to have. Just conscious of the time, I want to go through a few more questions before we get to the Q&A. But Deanna, like as we look towards the future, right? And that's kind of where everyone's mind is these days. I'm sure we're all so tired of hearing the word AI because it's all we talk about nonstop, but it is the future. What do you see as the critical skills of the future? And like where do you see the current skills gaps that are going to just keep expanding?
I think knowledge and expertise of how to leverage these AI tools is has never been more important. So I know it's cliche in the that was part of what the question was, but that truly has to be because the speed at which this is changing, I think, is unlike anything that we've seen before. I just think that we have to be able to adapt to this ever-changing environment when it comes to the use of AI. Not only, I guess, when I think about what it's done within Citi, just in the credit space, for instance, we're integrating AI into some of the credit analysis functions, taking out super manual, lengthy processes where that time is then reserved for value add decisioning on top of how are we utilizing it in training, right? So you can leverage what used to take, to build a case study, what used to take maybe hours or days or weeks, you can get 80% there pretty quick and then add in the rest. And I think we all have to be open to that. And I think the other thing is, and I have a feeling that this is kind of born out of COVID a little bit, but we have to get back to, I think, this commingling of technical and leadership skill building. There are, especially when I think about our senior credit officer evaluation, a lot of times people will go in with stellar technical skills, but they have development areas when it comes to, how are they coaching others? How are they, what does the credible challenge kind of look like in the credit approval process? And I think that that's something I've heard across multiple firms is that that's kind of always that sweet spot that we're looking for is someone who's really highly competent in the subject matter that they manage, but also has really strong leadership and professional skill development as well. So I guess if we can get all three of those things to work together, we'll be in a pretty good spot.
Absolutely. Patrick, any thoughts to share there?
The only thing that I would add is that we are also using large language models actively in developing the materials and case studies. It's
Yeah.
it's already here. I tell people all the time I have this fantastic new colleague who knows everything.
Yep.
They don't know the secret, but yeah, we're doing all the things with digital twin and trying to stay on the forefront of AI as it keeps growing. But as we see, the world just keeps moving faster and faster. So we just got to keep up and give all the different resources and modalities people need to learn the ways that they want to. We have a few of the bunch of questions in the Q&A, so we want to make sure we get to them with the time that we have. This one was for Deanna a few minutes ago, but how do you detect whether risk culture is improving at a desk level?
So I think how I'll answer that is two sides. I think there's some behavioral indicators. So one thing that came out of at the start of Citi's kind of risk transformation, wholesale credit risk, but just risk in general, is the fact that people didn't feel comfortable escalating issues. And that says something about your risk culture. I think people can know the right things to do, but if there's something holding them back from, if they've identified a risk, proactively escalating up their management chain or pulling in their partner and not having to worry that it's going to go in a different direction. Especially when it comes to a credit approval, for instance, we're all one team. Like we're just trying to get that credit approved. So you have to have that. And then the challenge culture, I think, is also kind of lends itself to being able to escalate. But credible challenge is a really useful tool. And I think it's not the word challenge sometimes is looked at as confrontation, and that's not accurate. I think we have to, if we see that that's happening, where people feel comfortable challenging someone else's viewpoint within obviously keeping it respectful and professional at all times. And then, tone and expectation, I think, is also a big one from ground up and top down. So I think that has to be something, that culture has to be set. The expectation for maintaining that culture has to be set from the top, but then you also have to have, culture, in my opinion anyways, is built ground up. I think you could be told to do something all day, every day, and it doesn't mean you're going to want to do it. So that I would say is more the behavioral side. On the more quantitative, measurable side, obviously there's a ton of metrics that I think every financial institution at least is held to. So things like, what your controls framework looks like. Have you had material breaches, audit findings, all of these things? So I feel like if risk culture is improving, you're going to have more conversation happening openly and hopefully less breaches and findings as a result. Obviously, there's always ways and mechanisms that you can seek feedback on these things. I know at Citi, we have a Voice of the Employee survey that all of us take every single year that kind of is a good gauge to how people feel about the environment here at Citi. I think peer institutions have something similar as well. I think you see it through kind of what's happening, though, more so than a response to a survey.
Right. And it goes back to what you said at the beginning of, you can just tell if everyone's acting like a risk manager, because that's the culture at Citi. So if they're not acting as much, then that's not really improving at that desk level.
Yeah.
A follow-on question to that just kind of popped in, but how do you align career pathways so risk skills support promotion criteria?
So at Citi, I can only speak for Citi, but it's embedded in our leadership principles and cascaded goals that come from Jane Frazier's level. It isn't an option anymore here. So I feel like when it comes to how we're thinking about promotion criteria, we look at not only what people are doing, but how they're doing it. And risk and controls is a huge part of both of those areas, not only how you're executing on the work that you're doing, but things like, are you taking all of your trainings on time? Which some people, when it comes to mandatory assigned training, that can feel like a check the box activity. It's not. It's tied to conduct risk. And we all have to make sure, especially we're a highly regulated organization, and little things like that, I guess, could raise red flags. So it's just, how are you thinking about ways to actively and I would say proactively mitigate risks that you're facing day to day? And also, how are you preparing yourself and your teams for, next level opportunities when it comes, when they come up? So it's a huge part of our promotion criteria, I would say, especially post transformation. These last 5 years, that's been the focal point. And at this point, it's pretty tough, I would say, to get a promotion in any regulated financial institution if you don't have a strong risk and controls skill set and aptitude, but it is something that's like directly integrated with us at this point.
Yeah, and I think how bespoke and tailored the programs that we deliver are, when they come and join and they maybe have that like mandatory mindset when they come back in, within the first half day, they're realizing how fun this is going to be and how great of experience it's going to be. So that kind of shifts and kind of the buzz attracts them from there. Another question that just came in. What trends do you foresee in risk culture and workforce skilling over the next 5 years, especially with generative AI becoming the mainstream?
Yeah, we kind of touched on it earlier, but it's not only how do we use these AI tools, because we have a whole suite of AI tools that are Citi approved, that it's really the expectation at this point. It's not a nice to have. So I tell people all the time, this isn't an option to use. So you have to be using the tools because the bank is assuming that you're going to be using these tools, and that's kind of factored into the capacity planning process. So if something used to take 10 hours and this tool is going to make it take 2 hours, but it's still taking you 10 hours, that's going to be a problem. Somebody's going to catch on to that. So it's not optional. You have to know how to use them. But how that then is transcending into, I think, the work that you do and how you have to pivot to be that value add decision maker. I think that's the biggest fear, at least, I don't know, on the floor here. The biggest fear is obviously I'm gonna lose my job to a robot, right? You're not. Like, you have to evolve with it though. And there's going to come a time where the success isn't running a debt rating model or a scorecard, inputting all of this stuff. And oh my gosh, this took me 12 hours to build this model. The machine built your model. Now your job is to interpret the results of that model, and you have to be really intuitive in doing that. And those analytical skills are still there, and you have to be able to. I think that's where the mindset shift has to happen. Is that success used to be doing the thing, and now AI is going to do a lot more for you. So then, what are you going to use all this time for? You know what I mean? You have to elevate, and I think that that's where. Um, It'll be interesting to see. It's still pretty new, and I do not consider myself to be an AI expert, but I'm diving in head first. We have to. So I think ask that question again. Whoever asked that question, it would be interesting to see come back in 2 years and see where we're at, because it's just the speed at which this stuff is evolving and changing the way that we work and think and live is really intriguing to me.
Absolutely. I think the comparison we see a lot, people talk about a lot, is when the internet first really blew up and came out, and everyone thought that's going to replace their jobs, it's going to replace the research, it's going to replace this, and it just wasn't the case. It just enabled you to be more effective, productive, and work faster. Patrick, one just came in specifically for you. What data points prove a learning pathway is working and worth scaling?
Ooh, that's an interesting, demanding question. The first data point is, are people actually learning, and are they able to take what they've now learned back to their job? That part, we depend on our partnership with Citi in order to know that that's happening. And we also depend on knowing that if it isn't happening, what do we need to do in order to make sure that people are able to bring those new skills into their work. But it also starts from the choice of what are we going to teach them and how are we going to help them learn. And that has to be driven by the necessities of the bank. And what is it the bank needs those people to be able to do now? And over my years of teaching, the answer to that question has been elevated many, many, many times. People have to really be able to understand the risks in the transactions and client relationships. In the past, it used to be okay for people to say, "Oh, I hope somebody in this bank understands what this is," but not now. And but it's always tricky for us to have evidence, right, of learning has taken place. We depend on feedback back and forth in order to have a feeling about that.
Absolutely, because it's so much more than just the test that you take and the scores that you see, but the qualitative of how they're starting to critically think and analyze all the different information that's coming in following the courses. And that's a lot of the feedback we hear, kind of like the feedback we get on the course. It's like our job. They come back with more of those insights to be able to speak to these things, actually critically thinking about them versus just passing that test.
There is one, what I'll call informal version of that, which I hear from quite a lot of people who take our courses, and that is, I'm here because my boss took this course and told me I should take the course. And I know that, I don't have evidence behind that, but when people who have grown up in their career have taken some of those courses, they realize how much it helped them. Then they recommend it to their people who now report to them. That's an informal version of good feedback, I think.
Absolutely. Kind of the best feedback you can receive. Another one that just came in, and Deanna, you started to kind of touch on this, but is Citi concerned about a possible generational shift as bankers from the boomer generation retire, and how do you ensure that institutional knowledge is being passed on to the next generations?
So I can't speak for Jane, but my take is no, we're not concerned. And I think that if this is a testament to why this apprenticeship model I think is so important. And um, I can speak specifically to the credit organization, right? We go into a credit training and they can learn the concepts, they can apply them via case studies, they can go back to their desk and apply them further in their day-to-day responsibilities. But I think Citi does leverage an apprenticeship model for so many of its functions where it's an integrated part of a senior manager's role to coach and to mentor and to pull those people up. So I think, luckily, I don't think it's like a light switch going off. I think as people start to retire, we've had some younger folks coming in, so that hopefully it will be a good balance. It's definitely not been covered in any of, our broader town halls or anything where that's something that we need to be concerned about in the future. And I think if everybody's just doing the job that they're hired to do, and part of that is making sure that the younger generation doesn't even need to be younger people, but that the next generation is kind of getting skilled up and can fill those shoes and take it even further.
Yeah, absolutely. And Patrick, you see all different types of people, background, ages, locations around the world when we do these trainings. Any thoughts? Have you seen anything between the different generations, the questions they ask, the type of way they approach the course, the technology they want to leverage more than others? Because that's always a question that comes up. Personally, I don't subscribe to that generational differences like you, Deanna. I just think people are more adept at the technology that's, being introduced as they're growing and they learn to, embed it into their workplace. Patrick, what have you seen from your experiences?
My experience is that we're fortunate. I feel as a teacher, I'm very fortunate. The people who I teach are well raised, well educated, professional people. And even the young ones are, behaving in ways that are very like what I would have done when I was back at the beginning of my career. Technology has clearly changed, and how people are able to absorb new ideas and grapple with new information will continue to change. Um, it it is definitely true that if you give somebody 10 pages to read and they aren't used to reading 10 pages on paper, they may struggle with that, but so far, no problems. I take heart, frankly, every time I teach. I am reminded of the quality of the people and where they're trying to get to, and how much energy they're willing to give. How many times are they going to answer those questions and work on those case studies? And so far, the answer is every time. No one
Yep.
ever says no.
I think that's a testament to the context that they have about why they need this training versus when you think about like early careers, it's a little different. They don't understand it yet. So they really want to digest it as much as possible. This has been great. And with the limited minutes that we have left, Deanna, Patrick, any final thoughts, pearls of wisdom, insights for the audience?
I've just been so pleased with kind of how the relationship between Citi and Intuition has grown over the years. I think that um, the sky is the limit. There's always, that's what's fun about training and learning, is that it evolves with the times. And I think that you guys do a great job. We certainly love sending people to the Intuition courses offered here at Citi, and hope to continue to do so for a long time.
I cannot add anything better than that.
Perfect. Well, thank you both so much for your time today. I hope everyone's found it as insightful and fun as I have. If anybody watching or anybody in the audience today has any further questions, please always feel free to reach out. Again, my name is Robert Fox, Head of Blended Learning here at Intuition, joined by Deanna Purdy and Patrick Pancoast. And thank you so much for your time, everybody, and have a great day.
Thanks, Rob.
Thank you.